What's going on, YouTube? It's Isaac's Trade here with a little update on what the hell happened right now. For a lot of you new investors over here, you guys might not be too familiar with the saying called sell in May, go away. It's pretty much self-explanatory. Probably not used to hearing it because, let's get real, this last year really, like, where were you really gonna go away to? So before we jump into this video, if it's your first time tuning in, please consider subscribing to my channel, smashing that like button, and sharing this with somebody so that way they can be financially educated and know exactly what's going on. Now remember, I'm not a financial advisor in no which way or any means. This should be considered entertainment. Before you buy or sell any asset, please consult a professional or hell. Don't be lazy. Look at some charts, read some articles, listen to some random guy or chick on YouTube. Now let's get into it, baby. So sell in May, go away. What is it, you might be asking? Well, it's a well-known financial world agenda. It is based on the historical underperformance of some stocks in the summary 6-month period, commencing in May and ending in October, compared to the wintry 6-month period from November to April. If an investor follows the strategy, they would divest their equity holdings in May or at least the late spring and invest again in November or the mid-autumn. So that's why, like, you're seeing a lot of stuff selling off, a lot of these high flyers. I mean, the same thing happened last year, but actually in 2019, which was like my second year trading. No, that was my first year trading. I mean, it was a lot more selling in May that happened because there was more places to go. I mean, this last summer there was more people at home. There was more investors. So I mean, in a way, when like they said sell in May, go away this last time, it was like we really didn't see it. Like we saw a pretty good sell off in May, but it really wasn't significant like 2019. So then they come back and invest again in November, mid-autumn. Some investors find this strategy more rewarding than staying in the equity markets throughout the year. They subscribe to the belief that a warm weather sets in, low volumes, and lack of market participation, presumably on vacations, can make for a somewhat riskier or, at a minimum, lackluster market period. So sell in May and go away is an investment edge warning investors to divest their stock holdings in May and wait to reinvest in November. From 1950 to around 2013, the Dow Jones Industrial Average posted lower returns during the May to October period compared with the November to April period. So remember that. I mean, we're going to kind of see where we're not going to have a big run up. I mean, not significant, especially with the reopening happening. But I mean, I think this is just old trader habits right here, thinking like, oh, sell in May, we got to hurry up and do it. Which, I mean, we don't have to. Me being a new investor, I don't believe in sell. Where the heck am I going to go, man? I need to make money, baby. Since 2013, statistics suggest that this seasonal pattern may not be the cause anymore, and those who follow it may miss out on significant stock market gains, which, you know, that's why it's not significant anymore. Excuse me. The origins of the phrase "sell in May, go away." The phrase "sell in May, go away" is thought to originate from the Old English saying "sell in May and go away and come back on St. Leger's Day." This phase refers to a custom aristocrat, merchant, and bankers who would leave the city of London and escape to the country during the hot summer months. St. Leger's Day refers to the St. Leger's Stakes, a thoroughbred horse race held in mid-September in the late leg of British Triple Crown. American traders and investors who are likely to spend more time on vacation between Memorial Day and Labor Day mimic this trend. Okay, makes sense? In a way. mimic this trend and have adopted the phrase as an investing edge. And indeed, for over half of the century, stock market patterns have supported the theory behind this strategy. All right, now I kind of went through and put together some some quick little percentage gains. This is just a quick little like a number. I just threw it together. We're gonna be looking at from 2010 to 2020. Well, actually, I don't have 2020 yet. All right, sorry about that. So in 2010, the S&P had a total return negative 0.3%. 2011, it was negative 8.1. 2020, it was plus 1%. 2013, plus 10%. 2014, we were looking at a 7.1% increase. 2015, we were looking at a 0.3% decrease. 2016, we were looking at a 2.9% increase. 2017, it was an 8.0% increase. 2018, it was a 2.4% increase. 2019, it was a 3.1% increase. Excuse me. So you kind of see it's been climbing a little bit and kind of like going stagnant, I guess, in a way. From 1950 to around 2013, the Dow Jones average had an average return of only 0.3% during the May to October period, compared with an average gain of 7.5% during the November to April period. Now you might ask yourself, like, well, why is that happening? Well, I'm originally from a place where it's really, really hot, and like we have, like if you're in a place where you have 4 seasons, you're really not gonna notice when people leave. Like if you're in a place and it's really, really hot, you're gonna have snowbirds. Okay, snowbirds are gonna come when it's, well, exactly like it says, when it's snowing. Once the snow melts and it's hot, hey, them birds, they're like, nah, bro, I gotta go. I'm going somewhere else where the snow is, where it's cooler. So during the summertime, down if you live in the desert, well, your bills are gonna go up, but your income's gonna go down. It's just the way it is. I mean, especially if you're like an independent contractor or you know, one that has to like produce in order to get paid, like a flat rate, then you know you're really gonna feel it. So like, this is my theory on what's happening, and it seems like it always seems to happen in May. Now you might say, oh, like, well, wait a minute, if you're not selling and I'm not selling, then who's selling? Well, you got to remember, you got all these older investors that have this state of mind that they have been in for so long that they're like, oh, well, we're not going to change because we're just so used to it. It's like repetition. This is what we've been doing for so long. It's like hardwired into them to sell for summertime, because they're like, oh, well, summer's here, time to sell and go on a vacay, because that's usually what the time that people take vacations is during this time. So I mean, I think it's just gonna go away. It's give it a little bit. I mean, what are we sitting at right now? I think we probably recovered most of the gains. I mean, it's just go shopping right now. Everything's on discount. Look at TLT is getting it. That's how you know things are going. Everybody's piling in the bonds right now. Well, they're not even really piling in the bonds. They're just pulling their money out, putting it to the side. And we really got to wait and see what Janet Yellen says here. But that's kind of my theory. So comment down below and let me know what you guys think is fueling this sell-off this morning. It's pretty nice, though. I like it. Don't be scared, man. Just relax. Take a deep breath and don't look at your account. Go out there and buy some discount, some high-quality discounted stocks. You know what I mean? Viacom, baby. That's one. It's not their fault. I'm out.